CNBC senior markets commentator Mike Santoli, and Wealth Enhancement's Ayako Yoshioka here to break down these crucial moments of the trading day. Ayako, I'm going to go to you first because you're here at the CASE conference. So we are at risk of social media posts from the president. This is the kind of market that we found ourselves in since Friday.
Yeah, absolutely. Volatility is back again as we start earnings season. And it's been a couple of days of just, uneasiness in markets.
Mike, it was an interesting day today for sure. You know, we got pretty good earnings from the banks, and they didn't participate early on. But some of the turns that we saw, Goldman and JP Morgan came off their lows. Wells Fargo having a day. I don't know how else you want to say it. Having a day.
Right.
And it got us focused on the fact that this is the start of earnings season in what is expected to be pretty good.
For sure. So that you would put in the asset column, not the liability column. And it was a real broad reversal to the upside as well for the indexes and also for some of the kind of riskiest, gamiest stuff, you know, the small caps and the profitless stuff. So it feels as if there was a kind of a mechanical dip buy in the morning where basically Friday's low was barely touched or almost touched. The 50-day moving average is right there, and the machines decided to make a bet, and the retail dip buyers that could hold. We were going to still color between the lines. So I'm not saying it's not about the trade headlines, but it's not entirely about the trade headlines. The trade headlines is what broke the low volatility upward grind that we had going into Friday, and that therefore kind of moves around, opens up this window for a little bit more chop. I find it interesting that we went right back to some of the risky speculative stuff. If we needed to get that cleared away, we didn't do it. On the other hand, you're right. We have earnings coming through. Treasury yields are down. Rate-sensitive stuff got a bid today. Home builders are up 3%. So the market is trying to digest this and not blow it out of proportion and not think that it's really a huge macro risk, even if it's a reminder that the backdrop is not perfect.
Yeah, Aya, where do we go from here then?
I think we continue to chop a little bit. You know, we have some volatility that's entered back, but I think we're going to go back to what comes out of earnings season. And I think what has powered markets higher has been tech, power, the AI theme, and I think that continues. And so every little sort of social post and geopolitical sort of risks that we see that are going to give the markets a little wobble, I think they're going to be buying opportunities.